What's happening, guys? So on this video I want to go through red folder news and news events which we don't trade, and also how we can use actual data highs and lows to actually form a bias on where price might draw towards. To begin with, I'm going to go through the actual days which we don't trade when they come up on the Forex Factory calendar. So we don't trade bank holiday, which is actually a grey folder, not a red folder. We also don't trade Thursday's NFP red folder. We don't trade FOMC, and that's Powell in minutes. But we do trade FOMC meeting minutes. As this is a pre-recorded speech, it's not actually a live one, so it's not as highly anticipated. We just have to wait for these actual news events to come out first before we begin trading afterwards. Make sure you've got a note of these actual trading days jotted down so you know exactly what to look out for on Forex Factory. For those of you who don't know, this is Forex Factory here. I'm pretty sure as a trader you're going to know what Forex Factory is, though, whether you trade Forex or futures. But yeah, we look out for the red folders if we're trading futures, the USD ones specifically. We don't want to be trading, let's say, 5 minutes before these folders, because it's just going to accumulate and manipulate one way and then just pump up or down. So when you're actually looking at the charts and you see a data low or a high, it'll be a big spiked wick like this. So this is how far price actually pushed down. On the 1 minute, it looks like this. So this is a 1 minute data candle. So we have a low of the candle and we have a high. Now what tends to happen is you sweep one side of it first before targeting the other side. What tends to happen is you sweep one side before then going for the opposing draw, which in this case would be the data low. We've got the actual data high, but we've swept that already, as well as a bunch of other buy side as well. And same on ES, we actually took the high here. So this particular trade, we actually swept London highs before then reversing, and this is the exact trade what I took a few weeks back on the 5th of September. So what we've essentially got is a sweeper buy side and then the actual uni model put in, and then it eventually hits TP and then takes that data low. So this is a great example of we take one side of the liquidity before reversing and taking the actual other side of the liquidity here. In this instance, this was actually a B plus setup because we didn't have any higher time frame fair value gaps to actually get a bias from. So it was a riskier trade, definitely a riskier trade, but we still had that model in place, so we took it. B plus because you can see we're going against 15-minute fair value gap, and we've got 5-minute ones also as well. I'm going to use these boxes here marked out as an example, but say for example we swept buy side, which is London highs, and then we'd actually tapped into a 1 hour and a 4 hour fair value gap, and there might even be a 15-minute fair value gap as well, what we've tapped into. That'd give our bias a bearish bias. So then when we're on the 1 minute, we're actually looking for that model. So before here, we didn't actually get a proper market structure shift for our entry until we broke these lows. We didn't actually get our entry till here because we wanted to see displacement on both NQ and ES. So this is the only point where we actually got that market structure shift with the fair value gap that's opened up for our entry, and then it targeted the data low. So we've got another example here of an actual red folder news candle, which is 10 o'clock. We had PMI on a Friday. So what you get before a news release is you get accumulation here just before, and then you get a manipulation of the sell side. This is how we would actually use these news candles to actually form a bias. So we've swept the low of the news candle, so that's fine. We've swept into a 1 hour fair value gap here. So let me just play a few more minutes. You can actually see that we've respected this 1 hour fair value gap. Now let's say, for example, there's also a 15-minute fair value gap here and a 4 hour fair value gap. we can actually use these fair value gaps to then form a bias to actually go long from here, because we've got another draw above, we've got the data high to take. So then we play a few more candles, we actually get a displacement through there and a market structure shift. We've also got a run through this bearish order block here with a fair value gap. So if price then decided to come back to this fair value gap, we could get an entry off the fair value gap to go long, because above on the 15-minute and the 1 hour we've still got London and Asia highs resting above. I mean, they're miles away, but this is a potential target to actually go towards. So we've formulated a bias as well after sweeping sell side, and we've got higher time frame sweeper liquidity as well. And then just like that, take the low, and then we actually take the data high with displacement as well. That's how we could use this example as to actually get an entry. Unfortunately, on this example, price didn't actually give a tap back into that fair value gap, but it did continue going up. Thanks for watching that video. I hope it actually helps you understand how to use red folder news as draws on liquidity. And yeah, thanks for watching.